Hello, my name is Amothic. I'm a goth VTuber who loves to forage for mushrooms and dance, but today's video is not about that. It's about something else, and that thing is taxes. If you're like me, you started your small business without knowing even the first thing about how to file your taxes. Well, worry not, because we're here to help. I reached out to my mom, who happens to be a tax professional specializing in filing taxes for small businesses. Her and I did a stream answering audience questions about how to start a small business, how you can file your taxes, and easy tips and tricks that people might not be aware of to actually help you save money and earn more from your returns. I've taken the liberty of creating timestamps for all of the questions that we answered, so please feel free to scrub through the video and only skip to the sections that are relevant to you. Without further ado, I hope you enjoy the video and find it helpful. Oh, that's a good start. My model disappeared.
Oh no.
Oh no. Hello, everyone. So everyone can hear us now. This is Mom.
Hi everyone. I am Em's mom.
Would
I
you
am
like
also a tax professional.
Yes. We're specifically going to be talking about filing taxes in regards to in the United States. We won't be saying specifically what state we file taxes in, but if you're outside of the US, or regardless if you're in a different state in the US, please look at your local tax laws because guaranteed they will be different wherever you live in some way.
Yeah. Taxes can be a little bit complicated only because there are sometimes complicated situations.
What do you think is the biggest misconception about filing taxes?
Well, I think what's kind of a funny misconception a little bit is that April 15th deadline. Usually it ends up being around April 18th because of federal holidays. Okay, this year I believe it's the 18th as well. You know, if you owe the IRS money, you need to get your return done by that date and send them a check. It doesn't really have to be the full payment of what you owe them.
Oh yeah.
So you can send them what you can, and then they will make payment arrangement with you so that you can pay, as you go. If the IRS owes you money, you still need to try to get your return in by April 18th or that filing date. However, if you are late for it a little bit, you won't be fined for that. Okay.
That's good.
There's no, they're not going to withhold some of your refund if you didn't get it in there by April 15th or that filing deadline date. Okay. You do have to file though, because there are penalties for failure to file.
Hopefully hopefully people always anticipate needing to file versus being like, oh, I didn't get something in the mail, so I guess I don't have to worry about it.
Well, if you remember a couple of years ago when they were giving out those stimulus checks, they're called the economic impact checks. Okay, EIP, economic impact payment, which is free money basically for everybody. And they base that on the prior year's tax filing. So if you did not file your taxes in that year, say 2019, right? Then you didn't get a check because they don't have a record of you filing.
Yeah, and I know specifically in my situation too, I was still a dependent for you the year prior, so we needed to wait until the next tax season for me to file as a non-dependent to be able to get my stimulus checks as well.
Right. That was a nice advantage for a lot of people that were in that situation for sure. So suddenly we had people coming in the office and they wanted to file like the last 3 years of taxes because based on that 3-year period, they were able to take advantage of all those economic impact payments.
Wow. So can you file multiple years of taxes at once then?
You can, yes, actually. If you want to make an amendment to your taxes because you found an error or you realize, oh, there's more money that I should have gotten, you're only allowed to go back 3 years.
Oh, okay,
to make those amendments. However, if the IRS discovers that you have not filed taxes, they can go back for as long as they want to.
They have the records.
To try to get you to really go back and make those filings. Unfortunately, the biggest, of course, the biggest penalty that's going to hurt you will be the financial penalties. They just build up, they accrue. So the longer you wait, the higher you're going to end up paying in.
It's harder to get out of, so try and be on time with your taxes, everyone, as much as you can be. All right, next question. This is one I came up with, but I feel like it could be applicable to some other people because I'm definitely still in this boat. I just started my own business and know nothing about filing my taxes. Where should I start?
Okay, you want to think about a name for your business. Okay, you want to decide if you want to file your business using your Social Security, or you can select a PIN number. You can get
Your
a PIN
EIN
number.
I know this one.
Right. What does it stand for, Em?
Oh, no clue. I just know the letters.
It is an employer identification number.
Ah, yes.
Okay.
Yes.
So think the word employer might indicate that you will have people working for you, right? Employees. So a good reason, well, when you do have employees, people that are working for you, that you're paying, you're required to have an EIN number. But if you don't, you actually don't have to have an EIN number to file as a business, okay? You can file using your Social Security number. There are reasons why you don't want to do that. The EIN number is free. So there's a website you can get on, EFTPS, and you can get on that website. You can file for a free EIN number.
I don't think I have mine yet. I was having trouble trying to figure out where to track it down. But I don't know if I'm officially considered a business, which is a good question to ask. I suppose I'll ask that after. Where's a good place to start, I guess, since you mentioned filing business? Unless you'd like me to go on a tangent.
Okay, so I'm going to give you the correct EIET. I always get the acronym wrong, but it basically stands for electronic filing. Of your, so if you get an EIN number, you will sign up for a PIN number to get on this website. I'm looking at it now. I got it bookmarked, so I don't have to remember it. But no. Okay, so anyway, just Google it. So basically, IRS EIN online application. You fill out the paperwork, then they will get back to you and they will issue you an EIN number. Okay.
Okay.
Then you're going to get on to the electronic payment system with the IRS, and then you're going to make your payments, paying in taxes. Okay. Honestly, the first year that you're in business, it's pretty much expected that you're not going to know what you're going to have to pay in for taxes, right?
Yeah.
Because you don't know what you're going to make. So it's not uncommon for someone to come in to the tax office and file, they want to file as a business. Okay. So we give them the correct forms for doing that. We file it with them. And then based on the income that they made, then we can figure out how much taxes are owed. Well, since they didn't know what they were going to owe, they didn't pay in any of their taxes during the year. Okay, they are going to pay it in when they do their taxes then. Okay, and I don't know how much detail you want me to get into this because I don't want to get too complicated for everybody, but like Em, I know I have helped Em file her taxes. And so when you bring in, so basically you're going to file, you're filing your personal taxes. Right? If you're not a corporation or a company, you're going to file with your taxes. It's called the Schedule C. And that is going to list all of the money that you got in and all of the expenses that you paid out for your business to give you a profit. And that profit is the income that you made for your business. And that amount is going to be combined with your personal income if you have another job that you get a W-2 from.
Yes.
So that combines together, and that total amount is what you're taxed on.
Okay. I think a lot of people who start their businesses, I guess depending on what they do, tend to work full-time or part-time while they
can I throw out a little bit more?
Yes, go ahead.
Okay, so you're going to think of a name. Okay, you're going to file that name. You don't have to actually do this. You can just use your name and your Social Security number. However, you might not want to do this because if you're making money from the public, or you're contracted from a company, then they're going to put on all their forms your name and your Social Security number. You don't really want that out there that much, right? So it's wise to come up with a business name and then apply for an EIN number, okay? And in your state, you're also going to be applying for an employer number as well. All right. The state is where you apply for your assumed name. That does not get filed through the IRS.
Yes, which is something I would definitely like to talk about as well.
Yeah.
Just for anyone who's not familiar with that process, and I do kind of have a question to tack on the end. So the first thing I'll say, I've gone through the process of filing something called the DBA, which is a doing business as form through the state where I live. And I think the filing fees, there tend to be some, it's not ridiculously expensive,
like
but
$35, I think.
Yeah, it's usually less than like $100, which I know 100 is a little steep for some people, but it's very important that, especially if you're in the content creator space where you are a bit worried about protecting your private information, your real name, your address, things like that. Different states have different requirements for the information that you provide for your DBA and then how you go about the process. So in my state, not only am I expected to divulge real name, place of business, which I have a P.O. box that I rent so that I do not have to disclose my private residence, but that is my place of business. And then I also was required to publish in a paper, which I had to pay for the publication for, to essentially dox myself to say, this person is doing business as a Mothic. So that's just a big asterisk.
Not required in all, that was required in the state you lived in, but it's not required in all the states, right?
Just a heads up though, anyone going about that process, please look at your local laws, because if that information is not stuff you want to put out there or not yet, just know that you could be required to. So good to know. I do have a question about that though. With doing business as / having an assumed name, that's not filing for a business, is it? That's its own thing? Or am I officially a business because I've filed with my assumed name?
No, you're not. You're officially a business when you start business activities. So basically, starting your business activities is what starts your business. You have an assumed name. Like I said, that's optional. Okay. You don't even have to really register as a business to file as a business. Okay. As you move forward and you start becoming successful, you will for sure want to go ahead and set up a DBA, okay? You're going to want to definitely set up a separate business checking account, okay? You have to make sure that you are not commingling your personal funds with your business funds. You have to separate those. The IRS really frowns on having your funds in one account and calling some of it business and some of it personal. So the other thing is you want to set up a spreadsheet or some kind of an accounting management system like QuickBooks or something like that to start keeping track of all the money that comes in and all of the expenses that go out. That's really important. The IRS starts to look at that stuff when you file a Schedule C with your personal taxes. That lets them know you have a business. So if they ever do question it, or they send you a letter saying they need to, see how you came up with these numbers, you want to make sure you have accurate records to show that.
Yes,
those are just some really important things about starting a business.
I think, yeah, definitely. This one is by Murasaki AI, who asks, at what point should you be prepared to submit taxes, aka how much do you need to earn in order to file taxes?
Okay, it depends on if you're single or married, okay? But say you're single, you need to, the standard deduction for a single person for this year, for 2022, is $12,950, meaning that whatever your income is, if it's less than that, you don't need to file taxes, okay? Because whatever money you make, your standard deduction is going to come off of that right away. And so say you made $15,000. Well, right away, they're going to take off $12,950 of that, okay? They're going to take that off. And then what's remaining is your taxable income.
Okay.
So if you don't have enough money, if you're less than that $12,000, say $13,000, okay, you don't need to file. However, if you worked for a company that took out taxes and you get a W-2, you want that money back, okay? So then you will file. So if you did make under $12,950 and you worked for McDonald's or somewhere, part-time, which is common with students in high school, basically, they're having these little part-time jobs. Well, they don't have to file, but they want to file so that they can get that money back, what was pulled out of their checks for federal and state taxes. They can get all of that back.
Is there a difference between minimum amount that you should make for filing personally versus as a business, or as a business, should you always be filing?
No, you don't have to file as a business unless you're an entity like an S corp or corporation or something like
Okay.
that. So even though, so for your purpose and maybe a lot of your audience purpose, you're filing sole proprietorship. Not if you made under that amount. In fact, if you made only a couple of $1,000s, I might recommend that that person file as hobby income. Okay, there's
Which I have only done to this point.
Right. So yeah. However, here's the difference. So if you're filing as a sole proprietorship or business, you get to write off everything that you spent money on to get to this far in your business, right? Even startup expenses, you're allowed to write those off as well. This year, I believe it's $3,000 right off the top you can write off for your startup expenses. But if you don't have enough, if you really didn't make a lot of income and you have another job that you work as well, okay, you can file what you did make. If it's only $1,000 or $2,000, you can file that as hobby, and you can write off what you spent for that hobby only up to the amount of money that you made. So that would bring it down to $0. That was your total taxable income for that. But there's, so it all depends on the intent and how far you expect the business to go. So now, you're in your second year of business, right? Hopefully you did better than you did the first year.
I think I might be. We'll have to see.
We'll have to see. So if that's the case, then, at some point you're going to jump in and file that as a business. Now, if you have a business and you did not make profit in any 3 of the last 5 years, the IRS is going to look at that as a hobby and not a business. Okay. And there are reasons for that, because people can play with a business income and combine that with whatever other personal income they have to max out or take advantage of some of those credits that are out there that are based on your income. So if your income is low enough, you can qualify for some earned income credits that can really give you quite a bit back as a refund that you didn't even earn. Okay. So there's reasons for that. So if you don't make a profit in any of the last 3 out of 5 years, then the IRS will consider that a hobby. And they probably won't go back and make you change anything, but they might send you a letter saying that going forward, until you make, some income, then you need to just not file this as a business. Does that make sense?
Yeah, that makes sense.
Hello.
All right, we are back. My mom has provided us with a link here, so she found the link earlier that she was referring to, and if you want to go ahead and tell them what you just told me.
Okay, so basically if you get on www.irs.gov, that is so loaded with all kinds of information. There's a search in there that's awesome. You just put in whatever you want to. But for underpayment, it's called the Electronic Federal Tax Payment System, EFTPS. You set up an account with them, and then you can just submit your taxes monthly. You can do it quarterly as you go through the year. And then at the end of the year, when you're filing your taxes, you've already made some of those payments. It's very slick, very handy to do. So here's the thing with a business, though. After your first year and you filed as a business, then you know about what your income's going to be, and hopefully it'll be more in your second year. So based on that, you will be able to figure out how much taxes you're going to be paying in, pretty much. If you came into my tax office, I would actually run some scenarios with you, and then and a lot of tax offices
some simulations.
Have the capacity. A lot of them have the capacity to do that now, where they can kind of run some scenarios with you, and then they would say, okay, this is what you're going to need to pay in quarterly.
Interesting.
So every 3 months, basically.
That was a question that we have, so let me go ahead and ask that actually. Lily Tries asked, I've heard that freelancers need to file quarterly or something. I don't even know how to word that question. I'm just simply confused.
Yeah, so, okay, so you're going to have to pay taxes. Okay, let me just try to explain something a little bit simple. When you work for a company and they're paying you, okay, they have to take from your check Social Security income, okay? So that's basically, it's 7.65% of your check. They are putting aside for Medicare and Social Security for you. So when you retire, that will be there for you, right? The company also matches that amount. So they take it out of your your check, and then the company matches that, and that total amount gets sent to the IRS for safekeeping for when you retire. Okay, so when you own your own company, you have to put in the employee part, which is you, and the employer part, which is also you. Okay, so you have to double that amount, and that is called self-employment tax.
Yep.
So you're paying double your taxes. However, on the flip side of that is you actually get to write off half of that, which is the employer part of it, okay, on your expenses.
Nice.
So that, if that answers your question, you will do that quarterly to start off. If you actually become bigger and you end up with over $50,000 in tax withholdings, the IRS is going to reach out to you and say, okay, we want you to start sending that money in monthly.
Okay.
Instead of quarterly. Okay, so they know this. You know, the IRS sees all the stuff coming in, and they're really good at sending letters out to let you know, okay, now you've reached this point, you should probably do this. Do not let IRS letters scare you guys. Anything that says IRS in the envelope always causes us to go, oh crap.
Yes, you clutch your heart.
But honestly, I mean, I had a situation with a company I worked for that they are so behind right now, the IRS, in getting stuff done, that they miscategorized an employee. So payments that I was sending in for the employees of the company that I worked for, they put it in for the first quarter's payment instead of the second quarter's payment. It was overlapped. It was like by a week. Okay. Ooh. So they sent me this big long letter, like 10 months after the fact, and said that we owed like over $400 for a $64
oh my gosh
payment that should have been sent in, and that's the penalties that accrued in all that time.
Wow.
So I looked on my bookwork and I'm like, no, that payment went in, they're wrong. So I called them. I got on the phone, I called them, very nice guy. And I said, well, the funny thing is, after I got that letter, like the day after I got the letter, I also got a check from the IRS saying, oh, you overpaid in this one.
What?
So the funny thing is, because they did not designate it to the right quarter, they showed me as overpaying for one quarter and underpaying for the other quarter.
Oh, yeah, I think I remember you telling me about that.
But then it took them 10 months to catch up to that. It accrued all these penalties and fees.
Oh, gosh.
So I said, well, wait a minute. I said, first of all, you guys put it in the wrong quarter. Okay. Second of all, I would like you to take away these fees and penalties because it's obviously an error because you also sent us a check back. So they were very kind and they said, oh, yeah, we can do that. So they will do that if you have a good record with them.
That's what I was about to say. This is a great example for why you need to do your bookkeeping or have someone else do your bookkeeping for you.
We had a good record with them. I never sent payments in late or anything like that. You know, I got them in on time and all that. So they saw that and they were like, oh yeah, no big deal. So that got all settled. But anyway, I'm just pointing that out to let you know that they have people working on this stuff all the time. They are so far behind right now in things. That's why that letter was 10 months late. And most of that is because of the economic stimulus payments that went out and the COVID, all the other COVID credits and payments.
Paperwork takes a long time, especially in the government.
Yeah, but what you need to be careful of is do not reply to any texts that you get from the IRS or emails. The IRS will only reach out to you by postal mail, by letters, unless you tell them that they can email things to you, and that you do that by setting up an account with the IRS.
There are a lot of phishing scams over the phone where you can be left very scary emails about how you owe money to the IRS. Don't be fooled by those.
Yeah, and the IRS will not work that way unless you have an account with the IRS and you told them you'd rather receive emails than letters.
Okay, well, we'll go on to our next question here. Atlas asks, let's say I'm setting up an online shop plus getting ready to table at events and buying materials. So they're talking about, I think, making a merch table at like a convention or something to sell things. Do I need to have registered with my country beforehand as a small business?
So you mean you've already put out money and getting ready for this event and have claimed income for it? No, you don't need to have it established as a business before that. Like I said, I mean, sometimes hobbies turn into businesses.
Yeah, definitely.
So when it comes to that point, if you get any forms from people that you've done things for called the 1099, it's going to be a 1099 miscellaneous most likely, or a 1099 NEC, which stands for non-employee something.
Something.
NEC, non-employee compensation. Okay, non-employee compensation. If you get that, a 1099 NEC or 1099 MIS, then that gets filed to the IRS. Okay, so they know that you've been paid for some work that you were doing outside of working for a company. Okay,
Okay.
so that's where you're going to start to go, okay, well, I'm going to have to file a Schedule C showing that I'm a business. Okay, it's okay that you didn't start a name and you didn't get an EIN number at that point, but going forward, if it's successful and everything, then go ahead and do everything you need to do. The most important thing will be to set up a separate bank account.
Yes.
Keep your funds separate from your personal funds.
I want to add this. If you are looking into starting a business bank account, definitely shop around with banks. Before I started mine, I was looking into a few different branches, some nationally, and I actually found that my hometown bank, a small bank, actually ended up having a way better set of regulations for the account, where I wouldn't pay anything in fees, essentially. I didn't need to have a minimum balance in the account, essentially. It was something really small and manageable, and they were super great about just setting everything up for me and having me sign forms. But definitely look into different banks, shoot them all an email, ask what their rates are for starting a business account, that sort of thing, and you'd be surprised how inexpensive it can be, actually.
When it comes to startup cost, actually for 2022, it's up to $5,000. There's two different startup business costs. There's a startup cost, and then there's an organizational cost. Okay, startup costs will be things that are going to be you're spending money on to get you ready to open your door or to open your site online.
Okay.
Organizational costs will be things like filing in your state for an assumed name or something like that.
Okay.
Those you can write off. Okay, they're both up to $5,000 the first year. If you and I've seen people spend more than this, especially if they start a business selling cars or something like that, right? So you can imagine, well, they bought a couple of cars, so they spent quite a bit of money, there ahead. Okay, so whatever above that 5,000 that you don't write off that first year, you're allowed to carry forward.
Okay, that's actually something I think it's related to this. If it's not, I apologize, but a good question I would like to ask that you told me an answer to before that I thought was really important and useful to know is being able to write off your business expenses, your startup costs over multiple years and kind of prorate that. Can you talk about that quickly? So for me, in my case, it was like the PC being a big cost.
Oh yeah. Yeah. Pretty much just what I said. You're allowed to write up to $5,000 of those costs the first year. If you spent more than that to start up, then the remainder, like if you spent $6,000, then if you spent $6,000 in 2022 to start up your business, you're only allowed to write off 5,000 of that. But then for 2023, you can write off that additional 1,000. Okay, you're already started. So startup, the startup costs are only for when you start up. Basically, you're not going to keep getting startup costs after that first year. But you can keep writing off above that $5,000 in following years. Does that make sense?
Okay, yes. In terms of, since you mentioned before that people can file their taxes up to 3 years back, do people ever do that to try and write off startup costs retroactively?
Oh yeah, there is definitely some playing around with that kind of thing. They cannot go back and amend. Well, yeah, they actually can go back and amend a return if they miss some startup costs previous year. Sure, they can do that.
That's awesome. All right, we'll go on to our next one. Lily asks, if your client base was all self-publishers or one-off commissions and not an actual business, how do you file your taxes properly?
That's a good question. I actually received from a client recently a 1099 miscellaneous from Twitch, and it was box 2 is the money that was put in there for under royalties. Okay, so royalties can be a lot of different things. Usually people think of it when it comes to oil or gas or timber. sales like that, but also copyright and trademark fall under that. So so if you have stuff you're designing as an artist and you're copywriting it, that's considered an asset. Okay, you might have sold that to somebody. If you sold your business, that gets actually very complicated. But if you sell your business, you actually get to write off your copyright stuff. It has a value. It has an intrinsic value to it. But anyway, so going back to that question, you still have income that you made. All businesses, there's service businesses that don't have any product, of course. So you would just do it that way. I don't know if I've answered your question correctly, but if you did that, you should get a 1099 miscellaneous, and it could be under royalties. Now, the one that I received in my office was only for like $146. Usually, a company does not, you don't have to give a 1099 miscellaneous to anybody if it's under $600 of income, but this was a royalty instead of income. So
okay, I imagine that question was kind of in the vein, I don't know if this changes the answer at all. I think it's kind of in the vein like how I do design commissions for people where I don't necessarily do them for other businesses but individuals. Does that change the answer at all?
And you get paid for it, right?
Yes, I would hope so.
Okay, right. So if you get paid for it, even if you don't get a form, you're going to want to claim that as income. Okay, but any expenses that you incurred while you were doing that design, of course, will be written off against it. So even if you don't get a form, you're going to want to claim that at income, which will bring me right now, if you don't mind me throwing in there, office expenses or home office expenses.
If you wouldn't mind me throwing in, we have 2 questions about that. Is that right if I just go ahead and ask them?
Yep.
All right. So the first one is by Alan Wrench, who says, can you write off your power bill if you work from home? The second one is from Absolute Cheese, who says, with things like home offices, at what point can you write off with that? I know you can put things like internet bill and some electricity, but at what point can you do that and for what percentage?
Oh, good questions. So I'm going to just put this out there. If you work for a company, okay, and you're getting paid from them, from your house, so you work for them, you cannot write off any home expenses. It's not allowed.
Interesting.
So a lot of people working remotely now, so people now actually getting higher incomes though, because they're kind of tying that in. You'd think that if you're working from home, that maybe a company wouldn't have to pay you as much, right? But you're at home using your electricity and your water and your heat and all that. So that's where people need to start thinking about negotiating their contract to include those kind of expenses, because the IRS is not going to let you write that off.
Interesting.
Right? That started with the Tax Cuts and Job Acts. What was that, about 5 years ago? I think it was maybe 4 or 5 years ago. Okay. It used to be you could write off all that kind of stuff as business expenses.
Did that include drinks? I remember that was one people did.
If you have your own business like you guys do, right, then yes, you definitely can write off office space. So what you need to do is work from one spot in your house. It can be a whole room.
Closet.
You have to figure out the total square footage, the square footage of your whole house, and then the square footage of just that area that you work in. All right. And then you get a percentage. So divide it. So you're going to take the area you work in, divide it by the total square footage of the whole house. And then you're going to get a percent. Maybe it's 15% of the house is where you work. Okay. Then you can take 15% of your electric bill, 15% of your heat bill, and you can go ahead and write that off. If you took that office and you painted it and you added stuff that is going to be beneficial for you to work in that office, that you can write off 100%. It was just done in that room. All right, if you share a room, say you got a small place and you don't have any room to have your own space as an office, you can actually take a piece of tape along the floor or the wall in that room and designate half of that room as your office space.
That counts as a physical barrier? So wait, do people try and pull that with like kitchens and stuff? Because I know kitchens are very particular.
Well, if you're a cook, I suppose, and working from your home, or a caterer, then that would be space that you would write off. But if you're doing what you're doing basically on the computer and everything, and the reason why you want to really figure out that percentage is if the IRS came through your house and they found a drum set, if they found a drum set in your office space and you have nothing to do with music at all, then they're going to say, oh, this room is not used solely for business. It's used for pleasure as well.
There's one thing I want to ask super quick, because I know you've mentioned this before. Couches, things like that. There are certain recreational items that you said might invalidate whether or not you can write off a space. Could you name some of those?
Yeah, maybe you're a psychologist though working from home and you have people
True.
come in and lay on your couch. Okay, then it would be fine.
Okay.
But if you have a couch in
What
there
if
and
you
a
use it
desk
for
in
your
there,
emotional distress?
well, you'd have to really show a case for that, I think,
Okay.
if you're going to write that off. But if you have in your office space a TV and a couch, you know, or anything like that, sewing machine that your wife or your friend might come in and sew quilts on while you're working your business, that's not going to fly with the IRS. It has to be 100% used just for business in that space. But once you figure that out, it's very beneficial to you to be able to write up all that stuff on there. And then, you know, if you do any painting, like I said, in there, or anything like that, then you can, or repair floor, you know, in that space or anything like that, 100% of that can be written off.
So I know you touched on this before, but I want to ask it again just for like extra clarification. Couples that share an office, how does that work for writing off?
Yeah, yep, good, because that's actually getting to be pretty common, except for the fact that a lot of times couples that share an office are working for another company, so they don't get to write off any of that. But if a couple share an office and they both have their own business, they want to separate the room. You have to separate the space, and the businesses can't cross over.
Huh. It's so interesting. They're so particular about
chance
that.
that the IRS is going to come to your house
And
but
look for your tape.
yeah.
Wow. Okay. So in that case, then, what if one person works for another business and the other does not? Can they do the tape separation maneuver, or?
Yeah, you can do that as long as you maintain that this certain amount of space is solely used for business.
Okay. I did have another question.
They got really strict about that lately in the last few years.
I know I had a question about the square footage and writing off that. Correct me if I'm wrong. Did you tell me before it's proportional to, like, say I have multiple roommates, proportional of how much I pay for certain bills and rent?
Correct. Yep, that's right. So if you rent an apartment with a bunch of people and you use, you know, half of a bedroom for your office space, you can't sleep in there though. So actually you can't, I mean, you would have to section off the part of the bedroom that the bed is not in. Okay.
We'll say it's a closet. We'll say they work in the closet.
Ridiculous, but they are that strict about it.
Okay.
But yeah, then you prorate your portion of the rent. So the same with telephone bills. So figure out your percentage use of your phone bill. So you know, who's going to get, unless you're really doing well and you're really getting up there and you have employees even, usually you're going to use your personal cell phone for business, and that is allowed as long as you can determine based on all of your calls and your costs, you know, what percent of that phone was actually business use. Then you can take your phone bill and you can write off that same percentage of your phone bill designated as business.
Okay, that's super interesting. Good to know.
The other thing, if you don't mind me throwing this out, there are things when you have a business that like, say you bought a computer that you just paid $3,000 for. Okay, you can, with special rules right now, you can write all of that off as one expense. However, there's something called depreciation, which will allow you to take that computer and write it off for a number of years. I believe it's 7 years. It's either 7 or 5 when it comes to computers. There's so many different rules for different equipment in there, and the IRS has a big listing of how many years you can write off something for. So it might be beneficial for you to take that computer, that $3,000 you spent on it, and write it off for the next 5 years, and then you get to take off $600 each year. You're going to get to write off $600.
That's awesome.
You know, till it's all depreciated. Or, you know, I mean, I've done a business for somebody this last year. It was their first year of business. They sell pet food. They dehydrate from their farm their animals' leftovers, kind of, when they butcher, they dehydrate them and they make pet treats. Well, they bought a couple of dehydrators, and they had the option of fencing the whole thing, writing it all off in 1 year, or depreciating it. I would advise depreciating it if you want to take advantage of spreading out those expenses, because honestly, a lot of a business's expenses do, you know, the bulk of it might be the first year when you're buying new equipment. And then what do you have to write off the second year?
True.
The more you can write off, the less income you're taxed on. So, okay, and leading leading into that, if you don't mind, Em, is there's something called a profit and loss sheet that you should be trying to keep. And that's when I said use accounting software or a spreadsheet, Excel spreadsheet or doc sheets or anything like that would work. First heading's going to be income, and you're going to list all the income you get on that. And then below that, you're going to write expenses, and you're going to list all of your expenses. Then the total of income minus the total of expenses brings you to your taxable income. And that's what you're taxed on. So you're not taxed on all the money that comes in. You know, you're taxed on what comes in minus what you spend to have that money come in, if that makes sense.
Yep.
Then you have things, if you're doing stuff like Poshmark, or you have reselling stuff, you're having to keep an inventory. There are rules for keeping that inventory. I would suggest you do this. Get on the irs.gov and put a search in for Schedule C, and that will show you the form that's used when you file your taxes for Schedule C. It will show you all the different things allowed for expenses, advertising, utilities, commissions. Commissions would be more of an income, but unless you sent out commissions, employees, health benefits, postage, just all that. There's all these kind of things you get to write off.
Nice. It's really as much as you can imagine, honestly. I feel like with taxes, it can almost be the sky's the limit. But when there are limits, they're very specific.
Yeah, that's true. They're very specific.
All right. Do you think you have it in you? Do at least 2 more questions?
Oh, yeah, of course.
All right. This question is by Dr. Nevermore, who asks, do you have to pay taxes as a tax professional?
Oh, yeah. Yeah, I do. I have to pay taxes. Yeah.
I thought so.
I get to do them for free, though, where I work.
Yeah, so she wouldn't have to pay a filing fee with her company.
No, yeah, I don't have to pay. It's a benefit we get for working for them. But I actually owe the IRS this year. I already know that 2 years in a row, but it's just a couple of $100 because I am single and I have no dependents anymore. And that's probably about the worst category you can be in as far as paying taxes.
Honestly, you should start a business so you get a little more help with what you can write off.
The thing about starting a business is sometimes it can be a real headache, you know, when you think of just all the things you have to do, that self-employment tax and all that. And it's great if you can certainly, you know, if you can survive on it and everything.
Yeah, I know plenty of people that just, even if they're small, they'll hire an accountant right off the bat because they're like, I don't even know where to start with this.
Yeah, you know, even accountants have their tax, well, not even, but financial service people, investment people and everything, they send their information out to tax pros. So, I mean, because it's separate. Accounting is one thing, bookkeeping and all that is one thing, and taxes is something pretty separate.
You have to take so many classes to know how to give advice and how to do what you do, and that's different than accounting, which I'm sure they have to take plenty of their own classes.
Yeah, but so what I was saying about, is it worth it to have your own business? It really is it your heart? You know, it's what you love to do and it's what you feel like you're called to do. That's what it comes down to. Something that, you know, there is that freedom, but there is a lot of responsibility in there as well. And I guess I would not be discouraged if it starts off slow, especially if you're in the internet world.
Yeah.
Like a lot of you guys are, that's gonna, you know, it's gonna take off more.
There's a lot of competition.
Yeah.
But we do get the benefit of not having to get a brick and mortar store, like getting a restaurant and paying for rent and worrying about people eating at my restaurant based on where it's located.
Yeah. So I guess going there, one more thing I guess I would say is sales tax as well. So if you're in a business where you're selling product, even online, there's different rules for sales tax. I am not that up on the internet rules for it, but I know different states require you, even if you're selling it online, to collect sales tax. Okay, so you could say, and some businesses try to do that, where they'll say, well, I'll just pay the sales tax and I'll just up the cost of a product. But that's really not, there are situations where you can't do that. You have to charge sales tax to the customer. Now that's all state too. That's not federal. So it depends on your state. You collect sales tax from the person that buys the product from you, and then you have to send that money into your state. You can't keep it.
Yeah.
You have to send that money into the state, and so then you set up an account with your state to collect sales tax, and that's easy too. Most states have that done online.
And I know doing invoicing on PayPal, especially if you have a business PayPal account. I'm not sure if you can do invoicing on a personal one, but there's an option to add sales tax there and to put in your your state sales tax then.
Okay, and so some of you guys might have heard about the 1099K that you will be receiving most likely. The rules for that used to be that if you made over $200,000 and 200 transactions, I think it was, then you would get this Schedules K, and then it's a form that's reported to the IRS. Well, you had to make sure then that you reported that, right? They told us last year that they're lowering that total so that you would get a Schedule K even if you made
600?
Like 600 or over. So that went way down to $600, which is the same as miscellaneous income. Okay, it's the same. The thing is, so when you get that, it's going to show your payments that you got in on PayPal or Venmo or some of these other things.
Cash App, etc.
The thing about that, what we're doing as tax pros is when we see somebody get that, we're asking them, okay, what was this for? If it was just for someone reimbursing you for something, then we're going to make sure that you're not taxed on it. We put it on a separate line with a little explanation that, well, this is because someone was being reimbursed for dinner when they went out, or picking up something for them. So it wasn't actually income. But the IRS actually rescinded that. So they did not make that mandatory this year. So you may or you may not get, well, for 2022, for tax year 2022, which is ones we're working on, you might not get that now because they rescinded that. They said, well, we're not ready to deal with that yet. So now you may or you may not get one. And if you do get one, and if it's, I wouldn't worry about it too much, but you want to make sure to know what's on there, what's personal and what's actually income on there. Yeah.
Okay, awesome. We got 2 more questions. We'll answer them as quickly as possible then. Unless you want to go for longer, but I have a feeling you want to start wrapping up.
Go ahead. Let's see how fast I can answer them.
There's only 2, so don't worry. You don't need to rush too much. Sanity's N asks, do we have to save receipts for the year when we apply for our taxes?
You absolutely should save your receipts, whether it's electronic, digital, or
both.
Paper receipts.
Can be good.
Save them. Yes, because if you do get audited, they're going to want to see receipts. What's really dumb about that is those paper receipts, they will fade after a couple of years. Yeah, so take a picture of it and keep it all in a file digitally so that you have all your receipts there. It's going to benefit you. You need proof. If they do audit you, you'll want that for sure.
Yes, definitely. And then Absolute Cheese asks, when is the best time to file?
Right now, there's a lot of places offering deals to file. The price to file is a little cheaper right now because it's not that busy. However, companies do not have to get the forms to you, those W-2s. They're not required to get that to you before January 31st. So if you file now and you missed a form, you're going to have to do an amendment. And that can be a pain and it costs more to file. So I would say definitely do not file before the end of January. Honestly, I feel like unless you only have one W-2 out there and you got it, then you can go ahead and file now. But with all the changes that went on last year and possibly changes that are going to go on this year, some of the changes last year, as far as unemployment that people got and federally it wasn't taxed, those changes came out in March for 2021's taxes. Well, a lot of people had already filed by then. Yep. So then at first we were looking at, oh no, we got to do all these amendments. But then the IRS reached out and said, no, you don't. We're just going to make it good on our end. Well, wouldn't you rather be the one to control what's on your tax return rather than having the IRS get in there and fix it for you?
You never know what they're going to do.
Right. So actually, I would say wait till first or second week of February. That's what I think. Why there's no hurry, especially if you owe it.
Is it always really busy at the end of tax season?
Yeah, it gets busy around the middle of April for sure. If you owe in, be prepared to send some payment in with your taxes.
Definitely. And then I guess quick question. No one asked this, but I will ask this.
You got 3 minutes.
Between the different ways that you can file for taxes, whether that's doing something like TurboTax, another system online, or going through a company, is there any preference on where people could get started? Can the cost be kind of too steep for them to go with a company right away? Or
okay, well, what I will tell you is there's really no such thing as a free lunch. So a lot of them will say file your taxes for free, right? I'm not going to mention the name of these different products, okay, but I know that we've had clients come in and they don't have their tax return. They can't get it because they went with one of those free filings online and it was free, but to get a copy of your return, you had to pay them. So it was free as long as you don't need a copy of your return. So you got to watch for that. And sometimes it'll be free to do it, but then they charge for filing it electronically.
At the end.
It might be free to do your federal, but then they're going to charge for your state, or they might give you even one free state. So it just depends on the simplicity of your return. Most simple returns, there probably is a way, I know I can think of a few of them, that you can do it free, but you might not have access to actually print that return out or be able to access it again. So that's the drawback on it.
Well, it looks like we've got about a minute and a half remaining, so we've done good on our time. Any last advice to send off everyone with?
Again, I guess I would reiterate that save your receipts, separate your personal from your business account. Opening up an account doesn't cost you anything at the bank. I mean, if it does, you go to another bank. But, they have free business checking accounts. You should be able to do that. That's just really important. You want to cover yourself, keep really good records. Don't go to your tax pro with a shoebox full of receipts and dump them on her.
No.
Happened to me one time, and I sent them home, and I said, "Go ahead and handle all this up for me."
That's great. That's good.
Yeah. So just be organized. A lot of footwork up front is going to save you a lot of headaches in the end, and it will help you sleep better because you won't have to worry about you not, being up and up with all of your stuff. You won't be so stressed about it.
Yeah. We'll get through it. The more you do filing your taxes, the better you'll get. Thank you for coming on. I'll follow up with you after stream. Have a good rest of your Sunday.
You too. Thank you. Bye.
Bye. Thank you so much for watching today's video. If you found it helpful, please give the video a thumbs up and also share it with anyone else that you know that might be in need of tax advice. And of course, please feel free to ask your own questions below in the comments section and let us know if you would like to watch another one of these in the future. Until next time, take care and have good luck with filing your taxes. You got this.